And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets, as always, with an eye toward preparing you not only for next week, but beyond. We have lots that we are going to be covering today. So it's been a very interesting week, to say the least. Let's take a look at some of the agenda items here. First up, as always, we're going to take a look at the current markets. How did we end the week? And beyond that, go deeper dive. We want to see what areas are exhibiting strength, those areas we want to stay away from that are showing weakness. And then also Q2 earnings season has begun. So we are going to take a look at some of the companies that report it and get a really good handle on how we are progressing so far. Also, Delta variance spread is unfortunately continuing, and there has been an impact. There are areas, the haves and have-nots, relative to that spread of the new variation of COVID. Pandemic stocks fade away. We're going to take a look at some of the names from last year that were super big winners. They really were starting to come on strong, but they are fading. Taking a quick look there. Of course, we do want to always each week take a look at some of those bigger, more impactful headline news items that push the markets around a bit this week. First up, we did see both consumer prices and then also wholesale prices. Both of them surged in June, not very good, certainly for the consumer, as higher prices are setting in. Fed Chair Powell did testify this week. His comments relating to the Federal Reserve's monetary policy did help calm the markets, but I would argue that that was a brief period earlier in the week. Also, weekly jobless claims did drop this week, but however, there is still labor shortages that are persisting. And the reason I'm pointing that out is because as a way to attract labor, there is going to need to be an increase in wages, which in turn will eventually, unfortunately, turn into higher costs. So keeping that in mind, industrial production came in and it was light, dampened by the semiconductor chip shortage that is impacting a number of these industrial producers. Also, retail sales numbers did, I would say, surge. I don't like to keep using that word, but they were really quite strong. A lot of it is restaurant and bar related. However, a follow-up report relating to consumer sentiment did fall. Consumers are really feeling the impact of that inflation. Simply going to the supermarket and alone would certainly give you a sense of that. Next week, not a whole lot. The economic calendar is pretty slow next week. Building permits, we will get manufacturing PMI as well as leading indicators that is going to come out next week. And from my work, that means that earnings season is going to have even more impact without a lack of some heavier weighting economic reports going into next week. So here we are. Let's take a look. This is the S&P 500, a daily price chart. We did inch to yet another new high earlier in the week, but today's trading action did push the index below this green 10-day simple moving average. And in turn, we did see a pullback of that RSI, but we are still in positive territory above that 50. Stochastics heading south, but we at this point in time are still above that neutral 50 area. Let's take a look at what we want to be on the lookout for in the way of potential further deterioration. I'm taking you back to this pre-election period. A lot of uncertainty, of course, going into last fall's election. So, indicators that further downside were ahead. First up, we can see back here in September, the RSI did drop below that neutral level. Let's go ahead and just draw our eye down, and you can see that the indexes did, in fact, fall further, but really important. Hopefully, you can see the high volume taking place on this decline. And then moving further along into late October, we are falling from a bit of a lower level, but the same concept. So those of you subscribers to my MEM Edge report, we are going to be all over this as far as the broader markets, and primarily because the broader market backdrop is going to be the most important item as far as determining whether you want to put new money to work. You want the broader markets, the wind behind your sails, so to speak. So we're going to be eyeing this action here very, very closely. So if you haven't already, use that button below. Go ahead and take a 4-week trial of my biweekly report at a nominal fee to keep you on top of the market dynamics as well as underlying. So from here, today, let's take a look at the S&P 500, those 11 underlying sectors, and I've gone ahead and added an RSI indicator, sorted it in descending order. The purpose here is to uncover where that relative outperformance is. There are pockets of strength in a relatively weak market. And then, of course, you want to make sure you're not in these weaker areas that are down here in this lower quartile. So let's take a look. We can see this is something I've been highlighting over the last several weeks. It's really coming to light much more this week, is a bit of a defensive stance here. We can see REIT stocks, higher yielding, healthcare up here in the forefront, utilities having a nice big uptick here this week, and then staples. So unlike, I would say, 2, 3, 4 weeks ago when we had tech up here in the forefront with communication services and discretionary, these areas are beginning to fade a bit while these more defensive areas move to the forefront. In addition to being defensive, there are other underlying dynamics that are pushing these groups higher. Hopefully, we have time to get into that very interesting movement taking place there. And then beyond those bigger sectors, actually, let me go back because I was remiss. I did want to go ahead and share with you some of these weaker areas, again, making sure that you are not putting your hard-earned money to work. Here is financials. As we drill down even further, we'll uncover precisely where the weakness is in the financial sector and what is driving that. And then also down here, energy, big drop. It was down again this week, almost 8%. Big deterioration, and we can see that your momentum indicator is now in negative territory. Again, I like to point out that volume, and we're in the summer month period, so volume overall has been trending light. However, in the energy, big pickup here on this deterioration. Secondary indicators with your shorter term moving averages trending below the longer term. That is a death cross. So let's go ahead from here, take a look at some of the other sub-industry grouping that can really shed light on where we are in the markets. Again, putting that RSI in descending order. So I've gone ahead and put in the Russell small cap. IGV is software, biotech, semis. I want to see where yields are. Brent crude pricing, and then the KRE banking index. So I'm going to go ahead and update this, and let's take a look, because interestingly, while we're seeing technology fade a bit, software is still up here in the forefront. The group was down 2.5% relative to that S&P down 1%. So by no means would I jump in because it's showing that relative strength. I can see a bit in the way of instability. We'll word it that way as far as software, and we can see that it was most certainly due a pullback with these overbought conditions as we headed into this week. This is something I mentioned in my MEM Edge report last Sunday. So let's take a look further. I'm going to go ahead and update this again. And as always, we want to take a look at some of these other areas in the market. So here we are. Take a look. Semiconductor stocks down 4% this week. And I'm going to share with you one of the primary reasons we can see this index has now broken below its 50-day simple moving average. Your RSI is negative and your MACD had that negative crossover, and we have been removing semiconductor stocks over the past 2 weeks from our MEM Edge report as the deterioration appeared to be settling in, and it has indeed come to pass. Let's take a look at KRE. This is the regional banking ETF. This is an area that had been a big winner in my report, but of course, as the group broke down, we are long out of the big winning bank stocks from our list, but more importantly, as it relates to the current environment, we can see that there is upside resistance. I'm going to share with you some names that are coming in with just huge numbers, year-over-year growth estimates revised upward. But as when you're looking at stocks, if they are in a group over almost 50% of a stock price's movement is going to be determined by the overall action in that industry group. So you want to make sure that you are not in these heavy downward trending industry groups, rather more constructive and more positive areas. So let's take a look, because I would be remiss to not show you the 10-year Treasury yield. This has a lot to do with bank stocks. Banks do tend to outperform during periods of rising interest rates. Has everything to do with loan profit margins, and not so good when rates are deteriorating. So from here, I did want to share with you another proxy, if you will. As for my work, I do traffic primarily in high growth stocks. I want to get in front of those big outperformers. So I'm very simply sharing with you a 2-month candle glance view of the ARK innovative funds. And a lot of these are in those high growth, really faster moving stocks. And quite simply, taking a look, we can see that they have been faltering here over the last couple of weeks. This is fintech innovation, genomics in the biotech space, innovation fund. This is the ARK Web. So really just a snapshot view, something that you can add easily to your stock charts as a way to monitor the sentiment and, of course, the price action among these faster moving stocks. So from here, I did want to take a look at the Dow components. And the reason is because the NASDAQ was down 2% this week, S&P down 1%. The Dow was down only 0.5%. So it is all relative. I've gone ahead and populated this candle glance view with the components, those 30 stocks that are in the Dow, and then sorted it by strength to weakness. So very quickly, as we take a look at these weaker names, it's going to confirm what we have been looking at. Energy, this is Chevron down here. Boeing is a different story, if you will, but we can see these bank stocks, JP Morgan, Goldman, they both came out with superior numbers, but they're just not able, they both reported earnings this week, and they're just not able to buck the downtrend that we are seeing within these banking and financial stocks. But let's go ahead and take a look up here at the forefront, because what you'll see are the consumer staple, Procter and Gamble, Coke up here in the forefront, and then healthcare. We talked about that defensive nature among healthcare, Merck, UNH up here in the forefront. So let's go ahead from here. Actually, I'm going to take a very brief break. When we get back, lots more to cover. We'll be right back. And we are back. Several areas I'm going to go ahead and cover from here is a very close look at earnings season. How are we doing? Are companies coming in ahead of estimates being rewarded? Because that very well most likely will set the tone for earnings season going forward. So first up here, I have Ericsson, ERIC. It is a Swedish company, but very well known relative to infrastructure play. And in case you can't see it, the stock is down 11% today, super big volume, and we can see your momentum indicators are negative. Quite simply pointing this out because there are individuals that may be tempted to buy stocks going into earnings. Ericsson had this nice downtrend reversal, was looking quite constructive. In fact, the company did come in with numbers that were below estimates. So we can see it really got hit quite hard. A lot of this is because the company is seeing weakness in China, and it has everything to do with retaliation. Ericsson did stop purchasing from the Chinese company Huawei, and China in turn banned some of Ericsson's products. So steep decline there. Also, it's important for me and you as well to pay attention as to why these companies came in below estimates, because the China retaliation, will that impact other areas? So let's take a look at another company that reported solid numbers, but is actually, unlike other bank stocks, this is State Street, STT. They're up 3% on the news. The reason I'm pointing this out relative to, I'll share with you another regional bank name that came out with 130% year-over-year growth, 28% above estimates, and the stock dropped 5.5%. So regional banks, this is what I mentioned to you. You want to pay attention to the group dynamics, but taking a quick peek back at State Street, which is also known in that larger big cap bank space, some of these names are able to buck the overall downtrend simply because their revenue sources are coming from different areas. State Street is an asset manager. They do a lot with ETFs. So it's a whole different animal, if you will, but honestly, it's not an area that I would be too interested in. Let's take a look at another company that missed, and I'll share with you why I'm sharing this with you. This is Autoliv, ALV. Already had been in a downtrend, not terrifically surprised, but take a look. The stock dropped 5% today, huge volume. I'm pointing it out because the reason that they missed is because of semiconductor chip shortages. The company provides airbags and other products to the automotive industry. So you want to be aware of that should you own other stocks that are reliant on chips as they relate to the automotive industry. Now, here's a big name stock that missed, and this is really important to be aware of because it is going to have a ruffle effect among other stocks in the group. This is Taiwan Semi, TSM. They are the largest manufacturer of semiconductor chips. So take a look. The company actually missed profit margins, and we can see this big significant drop. It's breaking now below key support, and really big news, certainly among semiconductor stocks. So in addition to being aware of what is going on as far as companies missing, or are they dropping despite coming in ahead, some of these headline news items can really be quite helpful as far as sorting out your holdings and making sure that you are heavier weighted in the more constructive areas. So here we are. This is Pepsi. Let's take a look. Big gap up on earnings. So by all measures, Pepsi, a big winner this week. Let's take a look, up 4%. And it's all about earnings with Pepsi. The company came in with numbers 30% year over year. And this is a company that historically puts forth single digit earnings growth. So they're seeing a lot of traction in their beverage as the reopening. I talked about restaurants and bars, and then also their snack division as well. So we can see that this particular move, actually, I talk about ripple effects throughout an industry. Take a look at Coke. They are due to report next week, and Pepsi's report got individuals. They also did announce new product soda flavors this week as well, but it'll be interesting to see where Coke comes in. What we're seeing is with some of these better known consumer staple stocks, they've been able to actually raise their prices and not miss as far a lot in the way of revenues. This, of course, is going to be companies that have solid brand recognition. So one last name I did want to share with you, because this to me is indicative of the current environment for companies that are reporting. Here we're looking at Levi Strauss, and they came out with their numbers on Wednesday, superior numbers, and they actually guided higher for the rest of the year. And originally the stock did gap up, but more recently it did fall back. Now, this has a lot to do with consumer sentiment. A lot of retailers did get hit this week. So really pointing out to you that this earnings season is not at all similar as of this point to Q1, where companies that came in were being handsomely rewarded. We're seeing a little bit of pushback. Of course, it's going to be a stock by stock basis as far as what group they're in and so forth. So from here, I did want to go ahead and talk about stocks that are seeing movement relative to this surge that we are seeing in that Delta variant. So it's going to be companies that provide testing, COVID treatments, or boosters. So first up, let's take a look at mRNA. This was one of the big NASDAQ winners this week. We can see this big gap up. Take a look at the volume characteristics here on Moderna. When you see that from here, you can see the stock is currently overbought on this daily chart. Historically, however, it can remain above in that overbought position. This, of course, is their announcement, their vaccine announcement last fall. But let's go ahead into an intra-day chart, and I can share with you that's a 15 minutes. Oftentimes, a 1-hour chart can be even more instructive, but what we are looking at here is the fact that Moderna, in addition to an earlier week advance on this gap up, remains in a positive stance. It's up above this shorter term 5-hour simple moving average. However, take a look, overbought here, and realistically, your MACD does not have any higher room, if you will. So what you will want to do is go back, use historical precedent on this 1-hour chart. This is more to help you refine and define your entry point if you are inclined. So we can see that going back to this overbought position, we did have a pullback. RSI trends downward, but more importantly, we want to identify that potential buy point after any pullback. And here we are, the stock breaks back above the shorter term moving averages. Your outside momentum indicator simultaneously turns positive, as does your MACD, and we can see a nice advance out of there. So let's go ahead and move on. Take a look at some of these other Delta variant movers, for lack of a better word, BNTX. This is the company that partnered with Pfizer as far as presenting their vaccine. There is talk, particularly from Pfizer. I did write an article on StockCharts over the July 4th weekend all about the Delta variant and those companies due to benefit. So here we see BNTX breaking back above their shorter term simple moving averages. RSI is positive. MACD just poised to have a positive crossover coming out of that lower position. We can take a quick look here at Pfizer. This is another, of course, the thinking is that there will be increased need for booster shots and visors at the forefront there. We can see it is currently poised to break out of this nice 6-week base RSI trending upward and your MACD. A couple of other names that might not be on your radar, but they are. They do have departments and areas of their business that are very instrumental in getting these vaccines distributed. And TMO, Thermo Fisher, is one of those names. Let's go ahead and pull up a bit of a bigger picture chart, and we can see that the stock pulled back. It's having actually a constructive week, certainly relative to other areas of the market. It's reversing that very short-lived pullback and poised to break out of a base. Another name that we can take a quick look at is Danaher, DHR, and the stock did today break out of this nice 2-week base on big volume. This is another testing and treatment play. We can see, however, a bit of an overbought position, so not overly constructive on that particular stock. So I did want to go ahead and talk about some of these pandemic-related stocks that have fallen out of favor. And this, of course, is for those of you that may have been intrigued by their turnaround possibilities. Just make sure you're aware that a lot of these names are really pulling back rather significantly. This is Peloton. Big winner, of course, stay at home with gyms closed. Their stationary bike product, very, very popular. However, it is pulling back. RSI, MACD is negative. Another big winner, I'm sure everyone will be familiar with this particular name. This is Zoom Video, and as of course it has become a household name, keeping people connected during the lockdown. More recently, it was showing signs of potentially having a nice continued bullish uptrend, but also pulling back here. CHWY, online only pet supply store. Again, these are names that big winners back here, faltered, had the appearance of reversing their downtrends, but this week are falling out of favor. But there are some areas that I did want to share with you. Let's just take a look at another big winner that is really faltering this week. This is Upwork. They do provide a platform for contract workers, and another big popular device or platform during the lockdown, but just having a not great week, a big drop here and continued further deterioration. But I did want to point out to you a couple of other winners during the pandemic that are holding up surprisingly well. This is Home Depot, all about people nesting, improving their home with, this is Home Depot, HD, and we can see that it is holding in, again, remarkably well. Outside momentum indicators in positive territory. We can also take a look at LOW. That's it for this week. And again, if you haven't already, hit that like button. Also, go ahead and trial that MEM Edge report for 4 weeks at a nominal fee. We'll keep you in front of the markets as well as stocks poised to outperform. Have a great weekend. See you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.